Hello everyone, welcome back to my YouTube channel. Today is August the 9th, 2020, Sunday. If you are investors, no matter where you are in the world, you probably invest in real estate, you invest in business, or you invest in stock market. As a stock market investor, you probably frequently ask yourself, should I invest in growth stock or should I invest in dividend stock? In this video, because I'm a huge number person, I'm going to show you if you invested $10,000 in each of these four companies, namely Netflix, Amazon, Apple, and Tesla, from its IPO until today, what your money will look like at today's market price.
Show me the money!
Show me the money.
Show me the money.
Show me some money!
Show me the money!
Show me the money. Show me the money.
Show me the money!
Out of these four stocks, only Apple stock currently pays dividend. It's on quarterly basis. The other three stocks, they don't pay any dividend. But these four stocks all considered as growth stocks. If you stay till the end of the video, I will show you my thoughts on the Apple 4-to-1 stock splits, which coming very soon at the end of August. And then my thoughts and my take on whether or not you should put in another at least $10,000 into this stock for your retirement and for your investment future. Disclaimer, I'm not a financial advisor. I'm not a CPA. This video and all my videos on this channel should be considered only for entertainment purpose. You need to do your own research to determine whether or not you should invest in any stocks or mutual funds or ETFs. Before I start, please smash that like button and give a comment to help with the YouTube algorithm. And also please subscribe and hit that notification bell and set it to all to receive all my future videos if you have not already done so. And please watch partial of the advertisement that whatever YouTube plays in this video. That's the best way to help me and help my channel to grow. Okay, first off, Netflix. It IPO'd back in May 2002. It had total 2-time split. In 2014, 2-to-1 split. 2015, 7-to-1 split. So total splitting was 15-to-1. Currently, it traded at a price of $495 per share. So let's say you purchased $10,000 at $20 per share back in 2002. That is 500 shares. After you times the splitting 14-to-1, then you have 7,000 shares currently times $495 per share. You're looking at your total value of $3.465 million over 18 years. That means if you purchased $10,000 without doing any trading, without looking at it, without selling, without buying any further, you are making about $192,500 per year. Just let your stock sitting there. That is a whopping 44,171% increase in the 18 years, or equal to 2,454% each year. Well, not every stock will perform like Netflix, because Netflix was the best performing stock in past decade from 2010 to 2019 in S&P 500. Currently, over 190 countries, people are subscribed to Netflix. Netflix is a true growth stock story. Regardless, so much competitions out there, the growth story of Netflix is still not stopped yet. Second off, Amazon. Amazon IPO'd in May 1997. At the beginning, it was just a humble online bookstore. Right now, look at the logo. They sell everything from A to Z with a big smile, which means whatever you can think about it, they will sell it. So it was IPO'd about $18 per share. Let's say you spend $10,000 and purchased $20 per share at that time. I want to keep all the comparisons the same. So you also have 500 shares of Amazon. In history, Amazon had 3 splits, 2-to-1 in 1998, 2-to-1, and another 3-to-1 in 1999. So total is 12-to-1 split in the history. So your 500 shares will become 6,000 shares as of today. The market closing price on Friday, Amazon was traded at $3,167 per share. Times your 6,000 shares, you're looking at over $19 million over the period 23 years. That means if you threw in $10,000 back in 1997 and totally forgot about it, you did not buy any more, you did not sell anything, regardless the market crash here and there, you are making over $826,000 each year without doing anything, just sitting on your stock. That is a whopping 199,420% increase totally in 23 years, or 8,671% each year. What kind of growth stock can beat like this? What kind of other investment can beat the growth in a growth stock like this? Good thing is you may not be the richest person in the world like Jeff Bezos. His net worth is over $190 billion. But maybe you will be the richest person in your neighborhood, in your block. And then your wealth of $19 million can pass down generation to generation and make sure your grandson and grandchildren, their financial future will be secured with your initial humble $10,000 investment. Definition of a growth stock is that the growth of a stock that is dramatically over the growth of S&P 500 in comparison. Look at this chart. This is maximum 23 years Amazon's chart compared to S&P 500. S&P 500 had an amazing 919% growth, which translated to about 40% per year for the past 23 years. But compared to Amazon's chart, Amazon going straight up, close to 200,000%. S&P 500, 919% looks like no movement compared to Amazon. That is the true definition of a growth stock. In comparison, Tesla has much shorter history. It only IPO'd back in June 2010 with Elon Musk's ambition of creating top-of-the-line electronic vehicles. The stock price was at $17 per share at IPO. Let's say you spent $10,000, purchased the stock at about $20 per share back then. You also own 500 shares. By the market closing price on Friday, the stock currently trading at about $1,452 per share. So your value of your investment are sitting at about $726,355. That means without doing anything, you just invested $10,000 at the beginning of Tesla's history, and you did not sell or buy or doing anything. You just totally forgot about it. You actually are making about $72,636 per year. That is a whopping 7,316% increase in the 10-year period, which translated to about 732% increase year over year. Currently, Tesla's market cap is at $270 billion, which is greater than the combination of GM, Ford, and Toyota. These three great companies, their total market cap is only at $247 billion. Last but not least, I'm going to talk about Apple stock. But since I have to talk about a lot about this stock, its IPO price, the appreciation, its dividends, its 4-to-1 split, and then my thoughts on whether or not we need to invest in this fantastic growth stock company. So I decided to put all this information into part 2 of this video, growth stock versus dividend stock. Apple happened to pay dividends since 2012. However, it's not considered as a traditional dividend stock. It's still considered as a growth stock. So I'm gonna emphasize all that in the part 2 of my video, which will come out 2 days from today's video, part 1's video. So stay tuned and good luck to everyone.
Excuse me, pardon me, my lover, my doll. I like the way the fragrance brings out her perfume. As for my coffee, no need for sugar. The word is sweet enough when she is in the room.